In the Forex market, trading volume fluctuates throughout the day, influenced by various factors such as economic releases, geopolitical events, and market sentiment. This happens in specific times of the day, which proves that price is affected by time. Time is the most important thing, then price comes second. Key levels created by price will only hold price in specific times of the day. If price reaches a key level before or after specific time zone, most likely that zone might fail to support or resist price. Given that the Forex market operates 24 hours a day, 5 days a week, trading activity varies across different time zones. Here's a general overview of trading volume in the Forex market using the Eastern Standard Time Zone. Asian session, Tokyo. The Asian session typically starts around 5 p.m. Eastern Standard Time and ends around 2 a.m. Eastern Standard Time. Trading volume during the Asian session is generally lower compared to other sessions, as it overlaps with the end of the US trading day and precedes the European session. European session, London. The European session starts around 3 a.m. Eastern Standard Time and ends around 11 a.m. Eastern Standard Time. This session is considered the most active and liquid period in the Forex market, as it overlaps with both the Asian and US sessions. Economic data releases from Europe, as well as central bank announcements, contribute to increased volatility and trading volume. US session, New York. The US session starts around 8 a.m. Eastern Standard Time and ends around 4 p.m. Eastern Standard Time. Trading volume remains high during the US session, particularly during the overlap with the European session, making it another period of increased liquidity. Overlap periods. The overlap between sessions, such as the European and US session overlap, from 8 a.m. Eastern Standard Time to 11 a.m. Eastern Standard Time, typically experiences the highest trading volume and volatility. During these overlap periods, traders from multiple regions are active simultaneously, leading to increased liquidity and the potential for more significant price movements. Overall, trading volume in the Forex market follows a pattern dictated by the major trading sessions and their overlaps, with peak activity occurring during the European and US session overlaps in the Eastern Standard Time Zone. We also have the last session, which is the afternoon session, which begins around 2 p.m. Eastern Standard Time. But we don't pay much attention to this session just like we do on the Asian session. And it's because volume is usually slower during this session. Now what does this tell you? Please pay attention, guys. This means each day is divided into 4 quarters. Asia is the first quarter, London is the second quarter, New York is the third quarter, and the afternoon session is the last quarter. Volume in the market gets injected in the second and third quarter. Now I've created some templates on how we can use time and price to take some trades. In these examples, I'm only gonna show bullish templates. You can just reverse it for bearish day or week. Low of the day if we bullish is usually created on either on London session or New York session. But sometimes it is created on Asian session, but it's rare. Now let's look at these templates. Let's start with a classic template. Asia usually is a choppy market and we should not be looking to take trades during that session. In a classic template, the low of the day is usually created between 2 a.m. Eastern Standard Time and 5 a.m. Eastern Standard Time, and you should be looking for entries during that window, period. During New York session we usually see a continuation of what London session started. We can also get entries between 8 a.m. Eastern Standard Time to 11 a.m. Eastern Standard Time. You only have 3 hours each session to get a trade. Since price is fractal, you can use this template if you're expecting a bullish week. Monday is treated like an Asia session, then Tuesday will manipulate Monday's lows like London session and created the low of the week. Then Wednesday will be treated as New York session, where we see a continuation of what Tuesday started. Second template, I call it the New York reversal template. In this template we see London session manipulating the Asian session highs, then go down. Then the New York session will sweep the London lows or even both previous session lows and reverse higher for the rest of the day. Same applies to the weekly template. In this template we see Tuesday manipulating the Monday's highs, then go down. Then the Wednesday will sweep the Tuesday's lows or even both previous day's lows and reverse higher for the rest of the week. The last template is the rare scenario where lows are created during Asian session. Both London and New York session becomes a continuation. In this day you usually see a very strong bullish candle with very small wicks. In a weekly profile, lows are created on Monday. Both Tuesday and Wednesday becomes a continuation. Here is a bonus tip. As I said earlier, that price is fractal. This theory can be applied to quarters of the day as session, quarters of the month as 4 weeks, quarter of the year and 4 years, where each year will be a quarter. Notice that high-impact news is always released in the second and third quarter. The news released in the second quarter, they usually set the lows or highs. Then the ones released on the third quarter are usually the continuation of what the second quarter started. But that will be determined by which template it is forming. Right now we're at the second quarter of the 4-year cycle, which means we're in a year of manipulation. This year we're going to experience some volume in the markets. Last year, if you noticed, volume was very low. That's because we were in an accumulation phase. That means events that will make the markets to go crazy this year are more likely to occur. Also, the United States is going for elections this year. COVID-19 was spread in the world in 2020, which was the second quarter of the 4-year cycle. Was that a coincidence? I don't think so. Second and the third quarter brings craziness in the markets. If you can notice, the Soccer World Cup is always placed at the fourth quarter of the 4-year cycle and also fourth quarter of the yearly cycle, which is end of the year. Why is that? The last quarter is usually peaceful. That's why December you don't usually see much volume in the markets. Now, as I was saying, we're at the second quarter of the 4-year cycle and we at the first quarter of the yearly. And we at the second quarter of the monthly cycle as for the time of recording this video. This week we should be seeing more volume in the market. But the month of March we will be starting the second quarter of the year, more volume and market manipulation are expected. That's where the United States will be deciding also if they're going to cut rates or what. That's totally not a coincidence. The quarterly theory provides time of making decisions. Time is the cause of price behavior. Price levels like support and resistance, order blocks, imbalances or trend lines or whatever you use. It means nothing without the context of time behind it. Those key levels will only work if they are being hit and rejected in specific times. Now, go back to your charts and backtest this and study the templates which one formed in some days, weeks or month. You will see it for yourself. This theory plays out each and every day, each and every week, each and every month and each and every year. Full price. If you enjoyed this video, make sure to subscribe to our channel for more content like this. Don't miss out on future videos. Hit the subscribe button and turn on notifications. If you found this video helpful, don't forget to give it a thumbs up. We love hearing from you. Drop a comment below and let us know your thoughts.